On Wall Street, we're all about forward guidance, and we might just get that in tonight's State of the Union address that we're finally getting. Joining me to talk market and presidential scoop is Jonathan Corpina. Hey, Jonathan, how you doing?
Hey, Livia. Thanks for having me.
Oh, thank you so much. Nice to have you, too. So, Jonathan, what kind of market movers do you think will be mentioned in the agenda tonight?
I think we've all been waiting for this speech to come, and I think we kind of know what he's going to say and how he's going to say it. Historically, presidents use the State of the Union to pat themselves on the back and to also promote whatever agendas that they have. So I think clearly we're going to hear about the wall. We're going to hear about the government shutdown. We're going to hear about building an infrastructure, and I think that's where his true message is going to really lead to, is to what he wants to build and continue to build for the United States and to help our economy build and grow.
Any mention of North Korea? I know you've been waiting for that mention this year. Will tonight be the night?
I don't think we'll hear that tonight. There's way too many things on the agenda. I think that the president really has to focus on. Clearly, he will talk about U.S. relations with foreign countries and how tariffs are going to play into that and our wonderful relationships we have with everybody. I'm sure he's going to paint that picture. But I don't think North Korea specifically is really going to be a hot topic tonight. Once again, he is going to talk about the government shutdown, the division that we have in our government, and the wall.
Now, last month, we pulled out $25 billion worth out of exchange-traded funds, despite it being a positive month. Was that a strategy change, or do you think there's still some bearish forecast and sentiment out there, Jonathan?
It's more of a cyclical change, right? I think with the market activity that we've seen over the last 3 or 4 quarters, you're going to get those shifts every once in a while. Clearly, the end of the year, there was a lot of volatility, a lot of pressure on our markets. I think once January came around and we saw the rebound, I think people felt a little bit more comfortable in our overall economy and overall markets on how they're going to trade. I know Goldman came out with a forecast saying that they think January might have been the best month of 2019 that we're going to see moving forward. I tend to disagree with that, but I think individuals have moved away in a very short period of time from the ETF product into more individual stocks.
Into like stock picking, you mean?
Exactly.
Today marks the anniversary of the Dow's biggest one-day drop that happened last year, and you were talking about volatility. It was due to the unwind of that. So what are your expectations for the rest of February this year?
Nice to see the market activity that we did see in January have the market kind of bounce back. I think, as we've spoken before, I like to see the volatility in the market. It's healthy for our markets to go up and down, but to see the large swings that we had in October, November, December, and also the large upswing that we've seen in January and the first few trading sessions of February, not particularly healthy, I think, for our markets. Kind of lulls you into a false sense of security that we're just going to continue to see green on our screen every day and continue to have the same headlines that we've been talking about for months and months and months. So I do think overall, when you take a step back and strip everything away, our economy is strong, the outlook is strong. It's just a question of we really have got some pretty significant hurdles we got to get through in the next few quarters.
We sure do, Jonathan, and I love talking about them with you. It's always nice to have you on the show every Tuesday. Thanks for counting down the State of the Union with me.
Thank you very much.